Hi there, this is Sandra with the Mortgage Center. Thanks so much for joining me at my live tonight. Just was making sure that everything was working. It was just taking a little bit of time to toggle through all this stuff. Okay, so the live tonight, what are we doing? We are actually talking about home renovations. So for those of you joining tonight, one of the things that we are going to look at, and I'm going to spend about 5 or 10 minutes just discussing this, is you have a major home renovation that you want to do and you're not sure how to finance it. And when I say major home renovation, I'm thinking probably anything over 20,000. So I get this call common now because most people are working from home and they've decided that maybe they don't want to move, but they want to look at upgrading their house. So let's get right to it. So there are two ways to finance a home reno, and now is a really good time to think about it because rates are at historical lows, and also people's home values are a bit puffed up, okay, just because of the market. So the first I would look at financing the home reno is you can easily access up to 80% of the value of your house. So let's just say your house is worth 650,000. I can just multiply 80% of that, which gives me about 520,000. And then I subtract the balance on your existing mortgage. So again, let's do the quick math. If your house is worth 650, 80% of that gives you 520, and then you subtract the balance on the mortgage, which is, let's just say in this case, 300,000. And now what it's telling me is that you have about 220,000 to do a renovation on your house. So depending on when you're going to do the renovation, this is a really important point. You can either get a secured line of credit on the house to do the renovations, or actually use that money and just withdraw the money from the equity of your house and put it in your bank. And I think, again, I said that the window's about 6 months. If you're thinking about you're going to be doing the renovation within 6 months, I would recommend taking that equity out instead of doing the line of credit. But if your renovation is down the road, you might want to do a secured line of credit. So let's go through the pros and cons of each. So with a secured line of credit, the interest rate is pretty typically prime plus a half. There are some financial institutions that will do prime plus a quarter. And what I would do is I would actually look at your entire mortgage. So I would look to see what the interest rate is on that first component of your mortgage, to see if we can just do a little bit of a better rate on that. And sometimes there's a penalty to pay, but we can calculate whether or not it makes sense to early renew the mortgage and get a secured line of credit, which is kind of cool. So the pro of the secured line of credit is you only pay for what you use. So in this example, I had said that the borrowers had about 220,000 that they could access in equity, and I've got some messages here, which is kind of great. Thanks everyone for joining us tonight. I've got a few people joining, so thank you so much. So if the equity that you have in your house is about 220,000, and we talked about getting a secured line of credit on that property, the interest rate will always be prime plus a half or prime plus a quarter. So the pro of that is you only pay for the money that you use. So if you've got 220,000 that's available for you, and let's just say you only use 100,000 or 120,000, you pay for that. The other pro, which I think could also be a con, is that you only have to pay interest on that line of credit. Now, some mortgages will allow you to amortize that mortgage after all the renovations are done, whereas others won't, that you'll have to keep that as an open line of credit. So again, the pro of getting a line of credit is you only pay for what you use. The con is I think you might be in a situation where you're paying interest only on that line of credit, not actually paying down the mortgage. The line of credit, the interest rate is a little bit higher. You are paying a bit of a premium. So those are some pros and cons of, again, when you're doing a renovation, putting the renovation or financing the renovation on a line of credit. The other option, which I like just a little bit better, is to actually finance the renovation, but use it and take the equity out of your house. So you can still access up to 80% of the value of your house. So again, in this situation, if the house is worth $650,000, I just multiply that by 80%, subtract the mortgage balance. So 650,000 times 80% gives you 520,000, minus the 300 grand, which is the balance on your mortgage, gives you 220,000 in equity. So in a second scenario, what we're going to be doing is we're going to be using the equity in your house and putting it into your first mortgage. So again, what we would do is, let's just say you had a $300,000 mortgage and you needed, let's just say 100,000 of that 220,000 that you could access. We would actually take that out, and again, this all happens through a lawyer, and you put that money into your bank account, and then you finance the renovation, which is kind of neat. The pro of something like that is, one, the interest rate, you only have one payment, and the interest rate is also going to be lower than having a mortgage and a secured line of credit. The other kind of pro of that is that you're actually going to be forced to pay down on the principal and pay off that mortgage. I guess the con would be, let's just say you were thinking that the renovation was going to cost you $100,000 and now it's cost you $150,000. Like, what do you do then? You know, do you use your credit cards maybe? I'm not sure. But I'm just going to wrap up this Facebook Live tonight with some tips. So before you start the reno, get a rough idea of what you can qualify for, right? So that would be a good option for contacting us, because we can get you pre-approved for that reno. And then also meet with your general contractor to get an idea of what the budget is. And then what we would do is we would actually move forward and get the mortgage set up so that you'd have a mortgage and a line of credit, or just one traditional mortgage, taking the equity out and putting that equity back into your bank account, and then you can get away with the renos. You can contact me, schedule an appointment. We love helping people. You can schedule an appointment. There's a feature link on my live at skipthebank.ca, and we'd love to help you. Thanks so much. Look forward to chatting with you about your home renovations.